The U.S. stock market just notched multiple lifetime highs. The S&P 500 and Nasdaq are leading the charge. Market momentum fueled by blockbuster earnings beats, especially in big tech and AI. Alphabet's numbers left analysts cheering. And looking ahead, it's not just busy, it's the biggest week of the second quarter corporate earnings. The likes of Apple, Meta, Amazon, and United Health all stepping up to the plates. It's the CB3 Financial Weekly Update, and it starts now. Welcome back, everyone. We're glad you're with us. Let's start with a cheer, because if you're in the U.S. equity markets, as all of our clients are, you're pretty happy right now. The S&P 500 closed last week at fresh all-time highs of 63.88, making it the index's 13th closing record of the year, 4 of which happened just last week. The Nasdaq 100, not to be outdone, surged to a new record above 23,272, finishing the week also at 23,272. So even though the Dow didn't quite set a new record, it's within striking distance, less than 300 points from its all-time peak. It's not unusual in these kind of fast market upturns or persistent market upturns like we've seen for the Dow to lag. It generally plays catch up to the S&P and the Nasdaq for the first few weeks anyway. So last week was a great week for all the indices. Why the surge? All right. Earnings season was a big kickoff with big tech and AI continuing to deliver, with Alphabet, that's Google, posting a big earnings beat, with earnings per share up 22% year over year and revenues jumping nearly 14%. Out of the S&P 500 companies reporting so far, over 83% have beaten Wall Street's expectations. You'll know from watching CB3 Live that a 73% beat number is the number we aim for, and they certainly hit that. NVIDIA up another 6% last week. The stock is now up 80% year to date and is a core holding in our discretionary strategies, aka DS program. Meta also up big. Microsoft up big. All of those stocks in our DS program. Tesla finally got off the mat after last week's earnings surprise, and the shorts are sweating, those people that shorted the stock. But it wasn't just tech. Semiconductors led sector performance too, up nearly 4% on the week. Financials, quiet strength as the regional banks rebounded, and energy even snuck in a 2% gain thanks to oil flirting with about an $82 per barrel price. I don't think this is done yet in crude. I think we're going to see that reach stronger up to about the $90 range. So this ongoing AI boom and the consistent strength of mega cap names are what's funding both the index gains and investor confidence, even in areas outside of AI and high tech. Let's not ignore the macro picture either, because trade talks are dominating the headlines. Why? Because just this past weekend, President Trump said that he signed the biggest trade deal in the world, that's a quote, with the European Union. Now, we don't know the details of that yet, but if it is true, that puts us within range of signing deals with the European Union, Japan, Korea, and that just leaves you-know-who, China. Trading volumes ramped up too on all the exchanges. 20 billion shares traded on Thursday alone, well above the 20-day moving average. This momentum is real, and that's the takeaway. Now, if you thought last week was big, you got to really get ready for this week. The heart of second quarter earnings season is upon us this week. The corporate titans are stepping up. So we're going to hear from these Mag 7 stocks: Apple, Meta, and Amazon, and that's just the start. United Healthcare Group, Tesla, and more are in the queue to report, making this the busiest earnings week of the quarter and therefore the biggest week of the summer between Memorial Day and Labor Day. Analysts will be watching especially for results from the AI and cloud leaders, consumer tech, and financial powerhouses. And if these giants deliver strong results, expect the potential for new highs, plus some fireworks in single stock volatility. And we watch all of that because we're always looking for the strongest leaders, especially in our more aggressive programs. So how should you think about this week up ahead? Stay bullish, but keep your eyes open. With the ongoing AI boom and the Fed still hinting at possible rate cuts in the year, the big picture for equities remains bright. Still, with high expectations can also come the risk of disappointment. Non-farm payrolls is this Friday. So in next week's report, I'll be giving you that update, all right? But realize that this particular time of year is normally not nearly this strong. I think this is because we've had earnings surprises and because the trade negotiations seem to be going finally in the favor of the U.S. So make sure you're locked in for next week's episode where we'll break down which companies crushed it, what it means for you, and where the market's headed next. Stay smart, stay focused, and remember, we've got you covered here at CB3 Financial. We don't just manage your assets, we become one of them, and we will see you next week.